Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, December 16th, 2020, and I am pre-recording this Trading Places Live for Thursday, December 17th. Had a really nice day in the market. Had the Fed come out, talked about raising its guidance in terms of what it's expecting for GDP. So that was good news. And overall, market just performed pretty well again. We saw most of our major indices moving higher. Or maybe I shouldn't say that because the small and the mid caps were both down. I think the Dow finished just slightly lower, but the S&P 500 closed above 3,700, and the Nasdaq was up 63. I'll show you those charts here in just a second. But before we get into any of that, I do want to just go over the agenda with you. We'll go into take a look at that daily market recap. Then we'll get into talking technically. There's a number of industry groups I want to go through. Momentum sleepers. Haven't looked at this in a while, and I'll show you a scan that I use, or certainly one that can be used to try to help identify some stocks that maybe have been sleeping for a little while, but still look pretty good technically. And I'll show you one way to do that on StockCharts. We'll get into earnings spotlight. There are a few stocks reporting either after hours or tomorrow morning that we'll take a look at, and we'll wrap up the show with the 3 you must see. But before we get into any of that, I do want to just point you to earningsbeats.com. Please make sure you sign up for our free Earnings Beats Digest newsletter. So many great ideas coming out here. Mondays, Wednesdays, and Fridays is when we publish it. Normally out before the market opens. Simply type in your name, email address, hit that subscribe button. We'd love to have you as part of our community. There's no credit card required. You can unsubscribe at any time, so we'd love to have you. If you want to try out our paid service, well, first 30 days you don't even have to pay. You get you do sign up with a credit card. There is a $7 charge, but we'll refund it to you. So literally for the first 30 days, it's free. We do have a special running right now at Earnings Beats, an annual special. So it'll be a great time to try our service out, see if you like it. You can check out our portfolio performance. We update this every day on our website, but you can see that our portfolios this quarter just continue to really crush the S&P 500. We've got all four are beating the S&P 500 this quarter, but 3 of them already in the first month, less than the first month, about 4 weeks. 3 of them are up at least 7% more than the S&P 500 in a month. So think about checking that out. I think our strategy is a pretty sound one. We do have both individuals and professionals that are members at Earnings Beats, and we get so much positive feedback. We'd love to have you try us. Anyhow, we do have also Market Vision 2021 coming up on Saturday. So if you go to earningsbeats.com, you can click to read more about it. But it will be held on Saturday. David Keller and Grayson Rose from StockCharts will be joining me. I think it'll be a great presentation as we look forward into 2021. All right. As far as the market goes, Dow Jones Industrial Average, as I said, did finish slightly lower, down, 0.15%, 44 points, still above 30,000. S&P managed to close above 3,700. That was good, up about 6.5 points. NASDAQ up another 63 points, closing at a new high, all-time high, 12,658. Some really good stuff in the NASDAQ area, I believe. We're starting to see a little bit more strength and a little bit more rotation back to some of those growth names. I'm going to talk about some of those in another segment in just a few minutes, so stick around. Mid caps down 8 points, down about 1/3 of 1%. Small caps down 6 points, which was a little more than half of 1%. Leading the action today, technology. First of all, take a look at technology, trying to make that breakout above the September high and the high that we saw just about a week, maybe a week and a half ago. Discretionary stocks breaking out to a new high. One other thing I think looks really good with the market right now is the XLY relative to the XLP, another all-time high on that ratio. And I think that's one of my favorite ratios to determine the sustainability of a move to the upside. So as we're moving higher, we've got money rotating into the more economically sensitive discretionary area, which I think is very bullish for the market. So things are really looking good. Been talking about it all year. I think it's just going to continue to get better. The Fed raising today estimates on the GDP. I think that's just the start. I think 2021, there's so much pent-up demand. I think this is the first of many raises as we go throughout 2021, and I believe the market's going to reflect that and continue rising. Utilities struggled, down 1% after moving up, testing the moving averages, pulled back a little bit. Not too surprising, but it did underperform today. I'd watch 61.5, 62. I'd be surprised if we go much below that. Software, going to talk a little bit more about this in just a bit, but software up over 2% today. First time, I always point out the best performing industry group and the worst one of each day. I can't remember how. It's been a while, a few months probably, since I've had software up here. I think this is notable and something you want to keep an eye on as we close out 2020. Aluminum, on the other hand, going the other way, but we are now down to 20-day moving average. I'm not surprised as we were moving up. Started to roll over with that PPO at the latest high. We do want to hold the 20-day, though. If we fail to hold the 20-day, then I think we could see some more selling in aluminum, so be careful there. 10-year Treasury yield. This was a little bit of a surprise to me when I got up this morning. Saw the retail sales report, which was weak. Retail sales dropped 1.1%, I think was the number, and the market was only expecting a drop of 0.3. I'm doing this off memory, so I might be off slightly. And then if we strip out the autos, I believe it was down 0.9%. The market was expecting it to rise 0.1%. So we came up short. And when you start missing on retail sales, you would think maybe some negative things about the economy, which in turn would tell you to jump into treasuries, sending the yields lower. Well, we actually gapped up. The yield was up 3 basis points at the open today, even after that news came out. And I was kind of scratching my head. We did pull back, finished roughly flat for the day, but still, considering that miss on the retail sales number, I was somewhat comforted by the way money at the open was still rotating away from treasuries. I think that's a good sign for the market. So the 10-year Treasury yield looks pretty good. As far as the economic news due out in the morning, or, well, you're hearing this in the morning. So due out for Thursday, we got November housing starts expected to match the October housing starts number, 1,530,000 units. November building permits actually expected to increase slightly. October was 1,545,000 units. November is expected to jump just a little bit to 1,553,000 units, so an increase of about 8,000 units. Initial jobless claims due out in the morning, 806,000 expected. Last week was 853,000. That was a big surprise last week, a big jump. So we're expecting that to come back down from 853 to 806. December Philadelphia Fed Manufacturing Index estimate 21.1. November was 26.3. So it's still a good number, but it is expected to drop a little bit. And I think this kind of is what most folks watching the market are expecting. Without a stimulus package, some of that strength that we saw, I think, has just been waning a little bit. I still believe whether there's a stimulus package or not, when we get beyond the virus, and I believe the market is already looking there, when we get beyond the virus, we're going to see things pick up in the economy. I believe there's a lot of pent-up demand. And when we get past this over the next few months, I think we are going to start to see it in the numbers. The market is already pricing it in, and that's the important thing you need to realize. The market doesn't wait to see those numbers. The market anticipates those numbers, and we're already seeing it. You can see it in the 10-year Treasury yield moving higher. When the yield's moving higher, Treasury prices are going down. Why do Treasury prices go down? Because bond traders sell Treasuries. And why would they sell Treasuries? Because they want to get out of defensive Treasuries and into the stock market, which is going higher. This is just very basic intermarket relationship 101. Money is coming out of Treasuries, out of the bond market, and it's going into stocks. And it's doing it for a reason. It's not going to wait for the numbers that we see in April and May and June and so forth. It's not going to wait for that GDP number to print. It's already anticipating it. All right, let's move on. Talk a little talking technically. And first group I want to talk about here is the software group. Now, I'm going to shorten this chart down a little bit, and then we'll annotate it so you can see what's going on here. We'll just pull up several months. But I believe today was a big day, and I'll show you why. I am expecting to now see a rally. We got one more level, obviously, to clear. We got to get through that September high. But there was the rally, okay? Now, what I think has been happening since then is we have been in a symmetrical triangle, which is a bullish continuation pattern. And I've been waiting for this to break. So if we take the highs, I mean, we've got multiple tests here, 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 and here, 4 different times. And then if we start back here and take a look at the lows, it's roughly like that. So I think we've just been consolidating sideways in this very bullish symmetrical triangle. Well, volume wasn't weak today. Volume wasn't off the charts, but volume was pretty decent. And we're getting this breakout. Now, we've still got one level that I think is really big, and that's the one right there. It's that September high. And breaking out of this now, first of all, as far as I'm concerned, maybe some of this sideways consolidation, at least within this triangle, has broken. So that's the first good news. Second piece of good news, and this is what we need to look for, is that breakout. And if we get it, look for software to really take off and lead this market. So you want to make sure you're positioned in some of the stocks in software that are leading the group. You want some of the leaders within that space. And I'll be talking about a couple of those in just a little bit. What else did we have in terms of industry groups? How about broadline retailers? Now, I mentioned the retail sales number was not very good. And so I was expecting maybe we wouldn't see very good action out of retail groups. But here we've got broadline retail making a pretty good move today. And very similar to the software group, made this move up, set this high in September, and then had a period of consolidation. And we're not breaking out of anything major just yet, but I would be watching that, and I would be watching this, because we have multiple tests now, 3 tests of this rising low, and we have 2 of the high. Now, I think we get up to about the 3340 area, 3350, maybe this high right here, also going to kind of come into play with that up or down trend line of this triangle right here. See that high? This high couldn't get through it. Well, that is now the trend line as well. So watch for this to follow software to the upside. This is another group that was a major leader in the market through September. Took some time off. Money rotated away from broadline retailers. Money rotated away from software. It went into some other areas, some of the beaten down pandemic areas. Watch to see if this rotates back. If it rotates back, you want to be a part of it. So make sure you keep an eye on broadline retailers. Another group that I would be watching, specialty retailers. So again, retailers didn't have the best news. This one is more of sideways consolidation than it is a triangle. You can see pretty clearly here. This low, these lows, this low. We haven't had a close below about 22.10. We got this high up here. Some will look at this and say, oh, we got a left shoulder, neckline, head, neckline, right shoulder. I don't look at it like that. First of all, we're in a secular bull market. I'm not looking for topping patterns. I think that is a waste of time, a waste of energy, and a waste of money. I would be looking for bullish patterns emerging and look for the breakouts in those bullish patterns. That's what I would be looking at. If I'm wrong, I can change my tune down the road. I think always having a bearish attitude, looking at things from a negative standpoint, I think it's simply wasting energy, time, and money. So take a look at the market, stick with what's working. Most areas are very strong. Some areas that were very strong, like specialty retail, like broadline retail, like software, they were leading through September. They handed the baton off to some other groups and said, okay, you take charge. We're going to sit here and languish for a little while. I think these groups are getting ready to move. I like the fact that you got specialty retailers bouncing off the 20, turning higher. That PPO now just starting to turn up from the center line. 20s above the 50. If we do pull back, watch the 20-day. If that holds, that's a signal. That's a signal that we're trending higher. So I'm beginning to get much more bullish some of these areas that have not been performing as well. And, the growth versus value ratio, the IWF, IWD is starting to show some strength as well. And these are the groups that would really begin to show in that particular ratio. If these groups, the software, the retailers, if they start to break out, you're going to begin to see that growth versus value really start to move to the upside. All right, I mentioned retail, so let's just take a look at the XRT. This is a widely diversified retail ETF. Look at the action. If you looked at this, if you looked at the action today, and you knew that retail was supposed to have a big monthly report coming out in the morning, what would you have thought? I would have looked at it and said, well, the report must have been pretty decent. The report was horrible. And yet we finished up more than 0.25%. That's telling us something. We can't just look at the news. We have to look at how the market is reacting to the news. Bad news, and it goes higher. Look at the trend, bouncing off the 20-day, coming down, bouncing off the 20-day, PPO positive. Retail is looking much better, and we need to be aware of that. One last industry group, recreational products. This is another group that kind of took a pause for a while, starting to show some strength. PPO starting to come off the center line, but you can see clearly last 4 or 5 months, we've been going sideways. A break above 520, be aware of it. That would be a breakout, and I think could lead to some additional money rotating back into recreational products. And what does that mean? Well, stocks that are leading recreational products, think about companies like Peloton. They're going to be the companies that would benefit from a breakout in this group. So that's what I would be looking for. I'm still a big fan of Peloton. All right, let's move on to momentum sleepers. So what I did is I ran a scan. And I didn't just run it against our chart list at Earnings Beats. I actually ran it against the universe of stocks at StockCharts. And here's what I ran. I ran just type equals stock. The daily simple moving average of the volume over the last 20 days has to be at least a couple 100,000 shares. And then I have 3 scooter filters. One says 77 days ago, scooter greater than 95. What the heck does that mean? Well, 77 days ago is roughly 3.5 months ago is roughly when we put the high in back in September. So a lot of these stocks that were leading back at the beginning of September have been consolidating for a while. Those, in my opinion, are momentum sleepers. They've just been kind of dormant. They've been hibernating. But now we're starting to see some of these groups move back to the upside. We want to find individual stocks that maybe are in this same, don't know what the right word is, but kind of in the same place. And so 77 days ago, which is roughly 3.5 months, 22 trading days in a month, that we wanted to see scooters above 95. So that's the StockCharts technical rank. If you're above 95, you're doing pretty well in terms of relative strength. Then I wanted to add scooter less than 85 now, but it's greater than 75. So I don't want stocks that have fallen out of bed and the scooter's gone from 95 to 40 or 95 to 20. I don't want that. But I want stocks that were leaders in September and still aren't bad, but they've just pulled back a little bit in their scooter. So they're between 75 and 80. I ran the scan, and then it did pull up a few stocks from outside the U.S. It pulled up some ETFs. I went through and deleted all those, and this is what it left me. It left me with 18 stocks, and here they are. Now, one thing you'll note on here, look at the software stocks on here. That's exactly what I was hoping to see. We've got 6, 7 software stocks on this list. The other ones, the retailers, well, there was one home improvement retailer. There was no broadline retail, no specialty retail that came up on this, but I really thought the software. So what you can do is I separate this by scooter in scooter order, and then click on the industry group. So when it lists software, it'll list it by the highest scooters down to lowest. Now, there are still some software stocks with much higher scooters that I think are certainly worthy of consideration. But these are all stocks that I think are maybe have pulled back a little bit, maybe poised to break out. Anyway, well, let's look at the charts and just see. Well, we've got Fastly, which had been beaten up back in October, came back. Now it's trending above its moving averages. So certainly that's gotten better. Next up, Cadence Design. Cadence Design looks like a little cup here off of an uptrend. So that certainly looks like a bullish pattern. Watch for a breakout there. Synopsys, I'm seeing a little bit of a breakout today, volume picking up. I think that's certainly worthy of consideration. DocuSign, this is a stock I think is going to continue to do well. Right now, it's still in this period of consolidation, but it has been up the last 4 or 5 days in a row. Volume's been a little lighter. I tell you, it's got some overhead resistance about 250. If we get through that level, I think it'll be a quick trip back up to 280. And then ultimately, I do think this is a stock that's going to break out. Shopify, this one really got my attention today. Look at the move up. Look at the volume coming in. Look at the AD line breaking to a new high. This has been a leader. It's been consolidating for a while, just making a breakout. This is a stock that I think is worthy of significant consideration in your portfolio. ServiceNow, breaking out, been in this uptrend for a while. AD line looks strong. I think ServiceNow continues to look strong. Two more of these, or one more of these. LivePerson, LPSN, last one. Still sideways consolidating, hasn't made a breakout yet. Watch, that 64 area, breakout above 64 with increasing volume. I think that would be fine, but the AD line here continues to just kind of go sideways. Doesn't look bad to me at all. So if we can hold the moving averages, break out above 64, I think you got another stock to consider. Again, these are just stocks that have been consolidating for a period of time. So these are momentum sleepers. Some of them starting to show a little bit more momentum, and I think they're worthy of consideration, especially, looking at this list, especially Shopify. I would say also Synopsys. Of the ones I just showed you, those would probably be my two favorite on this list. I think Cadence Design and ServiceNow right behind it. Fastly, because of the big drop, I'd be a little bit more concerned that maybe we'll see another drop, but that one has certainly improved. DocuSign hasn't really started to show strength, but I really like this one longer term. I think this is a good company. And then LivePerson, same thing. Just need to see a little bit more strength building there. So that's your momentum sleepers. There's a bunch of other stocks on this list you could certainly consider. I think Zoom would be a really good stock again at some point. I'd like to see it get through its 20-day moving average and stick there for a little while. So for right now, it still continues to consolidate. That's one I'd consider also. All right, moving on. Let's talk some earnings. So after the bell, Lennar reported. I'm going to take a quick look there and give you an update on what I'm seeing in after hours, because I looked a while ago, so I want to get the latest. Up 3.5%. That's more than it was before. It was fractional before. It was only up about 50 cents or 75, something like that. But it is up 3.5% to 76.90. And I really think that the home builders are going to continue to, even though interest rates are moving up a little bit, and that tends to scare folks off when they think about home builders. Listen, mortgage rates are still incredibly low. If we move up in the 10-year treasury yield from 0.4 or 5 up to 1.2 or 1.4, that really is not going to have a whole lot of impact on the housing market, in my opinion, especially if we're getting the kind of growth that the Fed's talking about. I think we're going to get even more growth than the Fed's talking about. I believe GDP is going to be over 5 in 2021. I really do. I think we already had a strong economy going into the pandemic back at the end of February. And I think we're starting to see some of that momentum build, and then throw in the pent up demand from everybody being kept locked up, and not really wanting to go out and do things. I think that there's going to be a tremendous pent up demand in 2021 to get out of the house, to do things, go to concerts, go to football games, go to restaurants, just do all these things. And notice those are all consumer discretionary things. People they're going to want to spend their money. And so I believe we're going to see a really, really strong economy in 2021. Anyway, I think the home builders, Lennar, will do well. And Lennar getting a pretty good reaction after beating estimates. I think their numbers came in at 282. I got it somewhere. 282. Yes, earnings were 282. Expectation 238. And another thing I can't stress enough, I've been talking about for a long time, when you are growing and you're beating estimates and you're raising estimates, raising guidance going forward, and you're in a historically low interest rate environment, valuations are going to go through the roof, and you've got so much money that's going to pour out of the bond market into the stock market. It's going to be the perfect storm. We're going to go higher. I'm convinced of it. I have no idea whether I'm right or not. I wish I knew for sure, but I am convinced and confident that stock market's going higher in 2021, probably a lot higher than people think. All right, another earnings report that was out after the bell is ABM. This is ABM Industries. They actually came up a little short on their estimate. They were expected to earn 72 cents. They came in at 69. So they did miss a little bit. And after hours, they were being punished, as you might expect. Stock down almost 7%, $2.74 to $37.60. Now, when I look at this stock relative to, I guess that's Business Support Services, IV, I think. Anyway, on a relative basis, you can see this hasn't been a great performer. I like to see the relative strength lines moving up. I like seeing the group moving up, and I like seeing all of these relative strength lines moving up. In this case, we're just kind of moving sideways to maybe even down across the board here. And then you see a stock miss its estimates and is down after hours. Wall Street's kind of telling us this. That's what these relative strength lines do. This is how, we can put all those MBAs to work for us. All those MBAs on Wall Street, we don't need to go into Goldman Sachs' office to find out what their MBAs are thinking. We just have to look at the charts. It'll tell us what they're thinking. It'll tell us not just what they're thinking, it'll tell us what they're buying, which is a lot more important. I mean, unfortunately, I think on CNBC and some of the other media, you get what people, are saying, but whether or not they're actually doing it or how much they're doing it, you have no idea. The only way to tell is look at these charts, follow the charts. All right, what else do we have? Well, we got time maybe for the 3 you must see. So let's move on. I will just let you know that tomorrow morning, Thursday morning. So as you hear this, it will already be Thursday morning. The big earnings news, or the big earnings that'll be coming out, we've got Accenture. They will be reporting. General Mills will report. JBL, Navistar, NAV, Rite Aid, RAD. Rite Aid's made a huge move over the last month or so. They'll be reporting tomorrow after the bell, Thursday after the bell, FedEx. That'll be one to watch. All right, let's move on to the 3 you must see. First one, I mentioned this one to members yesterday in the daily market report. One of the things we do is we follow short interest. And this is one of the most heavily shorted stocks in the market. And it was breaking out yesterday above all these highs. And look at the volume picking up. So this was sent out to our members yesterday. I don't know. I think when it went out, it was maybe at 9:40 or so. Stock's gone up 12 or 13% in a day since then. Look at the volume coming in. Folks have to cover. When you've got short sellers, you have unlimited risk to the upside. You think it's painful when you own a stock and it goes down. It's doubly worse when you're short and it goes up, because there's no limit to the upside. We know it can only go zero on the downside. Upside, no limit. So I think this is a stock you want to keep an eye on that could continue to trend higher. Next up, Coca-Cola. Coca-Cola, not a big fan. You can see yesterday, or Tuesday, it had tried to get back up and Breakout, failed. And it's not one of the best performers in the soft drink area. So just kind of going sideways. It's improved a little bit, but I really want to see that breakout. And then the last one I wanted to point out is CMG. Stifel raised or upgraded the stock, and we saw the big move trying to get through 1,400. It did close at a new high with increasing volume. I think that's very bullish. Chipotle I like. All right, that's it for today. It's my last Trading Places Live for this week. So I will see you next Monday at Earnings Beats for your next Trading Places Live. Have a great weekend, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.